Welcome to Building the Premier Accounting Firm. This is a podcast dedicated to helping individuals have a successful accounting, bookkeeping, and tax business. This podcast is a show dedicated to helping accounting professionals to confidently and competently offer quality accounting services to get paid what they're worth. Each of the episodes is conversational with tips and tricks to help you apply the principles of successful accounting practices in your own business. Topics include such things as marketing, lead generation, ideal clients, pricing, sales strategies, pricing strategies, accounting services that you can be offering and providing, value-added services, workflow, practice management, staff training and retention, client onboarding, client retention and relationship building, and so much more. I encourage you to listen to and enjoy the episodes, as well as to subscribe to this podcast for more information on how you can, in fact, build the premier accounting firm in your area. Now, I happen to be the host, Roger Knecht, president of Universal Accounting Center, and for more than 20 years, I've been working with accounting professionals to help them start and build successful accounting businesses. It's in that process that I've learned the tips and tricks, things to avoid, the things to do, the must-haves, so that you can, in fact, offer confidently quality accounting services and get paid what you're worth. Today, we have a special guest, someone I'm excited to actually have on the show. It is Rhett Gagon. Rhett happens to actually hold a bachelor's degree from Brigham Young University. Much of Rhett's professional career is involved working personally with high net worth individuals, training and speaking at conferences on a local and regional as well national level. Rhett actually has an expertise in cost segregation, and he began back in 2010 when he first actually joined the Cost Segregation Authority. Rhett continues to speak on a national and local level, helping accounting professionals better understand the value of cost segregation, both to the investor and accounting firms alike. He also has worked on thousands of cost segregation projects, saving clients nationwide hundreds of millions of tax dollars, as well as helping build Cost Segregation Authority to become a real dealer and leader in the industry and what it is today. Now, when he's not working, he's actually something that he loves and has a passion for, which is his wife and children. And if it can happen, he'll actually be out snowing or skiing in the snow during the winter. And if it's water and it gets hot, he's even out enjoying that. He is someone that has a great deal of fun when he's chasing and wrestling with his 4 kids at home. That's what makes him the happiest. Now, regarding the company, Cost Segregation Authority, it was first established back in 2006. At its infancy, it was basically just modern cost segregation services. It was founded in a large part by a father and son team who had spent their career in the construction industry, and they became passionate about the tax-saving strategies associated with real estate investments. So his family culture has actually stayed in the business, and what they've done is you'll find that most congregation firms are full-time CPA firms or perhaps offering other services to maintain their margins. But Cost Segregation Authority, their focus is exactly as their name implies. Hence, if you're a CPA or a tax advisor, you don't need to worry about losing your money on the tax return, because with the consultations with their services, you can actually introduce these services to your clients. So with that being said, welcome to the show, Rhett.
Well, thank you, Roger. That's a kind introduction. Yeah, and like you said, our ultimate goal is to be partners with those of your listeners, right? And assist them in their building their accounting firms.
Exactly. So let me just kind of start with your own journey. You got your bachelor's degree. Obviously, you ended up here at the Cost Segregation Authority. Tell us about your journey into this world of cost segregation.
Yeah, it was a little bit unconventional. I actually had a passion outside of this industry. I met my wife working in, behavioral health and helping troubled youth that way. I had to make a decision, do I go the direction of entirely different direction of a counselor and whatnot, or, this father and son that you mentioned is actually my father-in-law and brother-in-law. And they needed someone to expand their business nationwide, and it happened at the same time, and it just happened to be the right thing for our family. And so I left that industry that I loved and found another one that I'm just as passionate about in different reasons, for different reasons and on different levels. But so that's kind of how I got involved, about a decade ago, and really, really jumped into understanding, the nuts and bolts of it, and helped CPAs, EAs, accounting professionals understand this really misunderstood niche within the accounting world.
Well, first of all, it's amazing how our families influence a lot of the things that we end up doing in our lives, especially from a career point of view. So here you are, you marry into a family and ultimately it becomes part of your career path. But I'm curious, you mentioned behavioral health.
Yeah.
What kind of things have you found that from a behavioral health point of view actually relate in the business that you're currently working in? Because you obviously mentioned that you're passionate about what you're doing today. Have you found any correlations between the two?
What I learned in that industry that I think applies universally is understanding people a little bit better. I mean, I think everybody has their secrets. Their, in that industry, I don't need to go down that road too much, but I learned a lot about people, about what makes people tick, about what the reasons that we do things the way that we do. And I think that applies, especially as you get into and running a business. You deal with a lot of employees, and every one of them is different, and they all have different things that make them act the way they do or respond the way they do to certain things. And I think I'll be forever grateful for what I learned, about those whose problems were a little more on the surface than most of us, keep inside. That I was able to see those and work through those and learn a lot about how people work, what makes people respond the way they do, and hopefully my relation, ultimately what helped heal those in that industry was the relationship. And I think I took that more than anything, is that relationships matter more than anything.
Yeah.
So,
Well, we're definitely creatures of emotion, and whether it's cost segregation or something else, our emotions and how we choose to make decisions is very, very important. And so that behavioral health element and how it actually applies to decision making really can be very helpful as you're dealing with cost segregation principles. So tell us, just for the listener here, let's just go back to the core. What is cost segregation? What are we really talking about here?
yeah, that's a great question, and it's one of those that's so specific. It's almost I've found it over the years difficult to describe in a nutshell. But basically, in a nutshell, you're talking about accelerated depreciation, and correctly classifying assets within a building that typically get lumped together as one sum. There's hundreds of assets within a building, and it's separating those and putting costs to those correct class lives that ends up accelerating the depreciation and creating huge tax deductions for the real estate owner or company that owns the real estate.
I find it fascinating. It is a very meticulous and integral part of the accounting model that, we could simplify things and in fact oversimplify things to the point that we're just not realizing the tax benefits that are available. And in cost segregation, we can really itemize things to the point that we just experience some big windfalls. So this cost segregation, in a nutshell, it really helps or benefits real estate clients. So these would be land investors, real estate investors. It would be people that have commercial real estate, basically like property management companies. Tell us a little bit more about who this client is that would actually be doing the cost segregation.
I'm glad you bring that up, because ultimately, in the end, we end up benefiting the taxpayer, right? But I have found, and our business really has thrived off of building relationships with accounting professionals, because we found over years, and we've heard numbers of stories over the years of professionals that have either gained clients or lost clients because they didn't fully understand the benefits of what cost segregation can do, or didn't offer that to their clients, and ultimately the taxpayer wants to save the most they can, and so they find those ways, however those means may be, whether it's through their tax preparer or a friend down the street that they admire, or whatever that might be. And yeah, ultimately, those who are paying the tax on their that own the real estate is who benefits. But I think it would be naive to say that we don't benefit the tax preparer as well, by giving them and providing for them a confidant, a trusted advisor that they can rely on to provide this for their clients, and add that benefit to their arsenal of services that they provide as well.
So the way I would describe it is, for the accounting professional, this is an opportunity for them to niche their services and really get into a special type service that allows you to uniquely charge for services that you're providing in a real estate world where people who are investors have money, they have assets tied up in real estate, and you get through your expertise to help them realize the tax savings that are available, and in doing so become really for them a hero, because you've really realized for them some cash savings simply because of how you were able to meticulously identify the available savings in their properties. And so
Yeah.
all of a sudden you're in a situation where instead of just doing a simplified tax return, you're really getting down to the minutia that through these cost segregation methods really impacting your clients favorably. And so all of a sudden you're the hero. You're getting a client that's going to come back to you again and again with tax services. You get to charge well and handsomely for your specialized services in this niche. And just because of what you do, you're going to naturally get referrals, you're going to retain your clients, and more importantly, start working with some people that have monies because of the properties they're actually investing in. So in a nutshell, that's kind of what it is. So what value would you say the accounting CPA firm, tax firm benefits by really offering a cost segregation service?
I'd say it's the opportunity that you have to retain and to grow your clientele by offering this. There's so much, and I realize that there's so much for a CPA or an EA or a tax preparer, tax professional to be cognizant of. There's the tax laws. Every time they're updated, every few years it seems, have thousands of pages that they're expected on a moment's notice to be the expert of, and that's just not reasonable. That's just not really possible to be the expert in everything. And so we can be that expert. We are that expert for them. And like I mentioned, we have regularly, we get asked, by clients that come to us by other means outside of their tax professional. They ask us for a recommendation on a tax preparer because their tax preparer is not, didn't offer this or isn't familiar with it as much. And so that's our goal. Our primary goal is really to make you look like the hero as the accountant.
Exactly. So let's talk about this from a practical standpoint. I'd like to ask for at least two stories. First, some stories about the real estate person who is realizing this. And there's so many stories out there of how through the itemization you're able to benefit. So let's talk about the taxpayer and their situation. And then I'd like to ask for a second set of stories, or just one, of how an accounting professional was able to use this as a service in their firm to really grow their business and offer a unique service. So let's talk about the taxpayer. Give us some stories of what it is that you've seen happen there.
Yeah, no, that's great. In fact, the first individual, when I came into this, 10 years ago, just reached out yesterday. And his is a story that always comes to my mind because as we've built a relationship over the years, he reached out. He just bought another apartment complex, and his story is as such as he's shared with me. He said, I was able to put my kids through college and pay for their college by saving what I would have otherwise had to pay to the IRS. The amount that you saved me in tax money allowed me to do just that, to put that money towards something more beneficial. And then when that benefit ran out, I bought another property and I used it again and paid for another child. And so that's, for me, that's a rewarding story to hear that. Yeah. And that's what I love about what I do is I'm creating these huge tax deductions, but really what I'm not even able to see is the real impact that's happening on the other end, what that money that's not going to Uncle Sam is able to do in the real lives of the taxpayer and make a difference. And so he's like I mentioned, he's bought another one and he utilizes this, and he says, I haven't had to pay, excessive taxes for years, and I've been able to utilize that money to invest in other properties elsewhere.
So give us an example of how that particular individual deferred their taxes and actually in
Sure.
that specific property was realizing that benefit.
Sure. So what we end up creating, we created this, in his case, it was, tens of thousands of dollars tax savings that offsets his income. And so by being able to, it's used as a typical tax deduction. So it offsets his income and brings his income down to a level. And that's really flexible too. And we have clients that use it, just bring it down to a level of tax that they feel comfortable paying. Others wipe out their tax entirely, and by bringing their income down to zero because they take losses on this property. And so his income becomes a loss, and then he does not have to pay tax. And so he's able to use those. Otherwise, with his high income, he would have had a significant tax bill, but given the property that he purchased and our services through the cost segregation, we're able to bring that down to nothing, and he can put that money invested elsewhere.
So give us some examples of what ends up being itemized. My limited knowledge, I know of some examples where it's lighting, sometimes it's flooring. I know of some things that are outside regarding landscaping. Give us some examples of what is it that if we chose to itemize, we can cost segregate, and in doing so, find these savings. Otherwise, it's just this lump sum expense. So what are we itemizing?
Yeah, that's a great question. And as you think of any building, there's so much to it. I mean, you've got, even in the construction of the building, you have how many people that are involved in that, right? With the framing and the sheetrock and the floor, the finish work. And every one of those represents something, a different asset. They're contributing something to the building, and those separate assets, right? Your flooring, you mentioned, you've got cabinetry, you've got electrical that actually is type. We can actually classify electrical that's used for property, personal property, like a copy machine or a TV that's specifically, or a projector. And there's actually portions of that electrical that we can take as well. So, which isn't typically thought of or even understood how to break that out. But those are some of the more common assets. Yes, you mentioned lighting. I've mentioned cabinetry, and it runs the gamut. Exterior, you've got everything above the dirt, really. So paving, sewer systems, sewer drains, and all of that kind of stuff that we're counting. We go to, it's funny. We went to, we don't mind ever getting the projects that are in Hawaii, and we love going to one, especially in the colder months here in Utah, right? So we don't mind going to Hawaii in the wintertime, but we went to one and we got some odd looks as we're outside counting all the trees and shrubs, right? But those are tax deductions. And so, I think on that particular resort, there were, over 15,000, but it was beneficial for the taxpayer in the end. And so, those are the kind of things, just to name a few.
Aren't there also savings based on certain materials? So if you're in the construction phase, or like you were mentioning, landscaping, you could actually have, if you know how to cost segregate well, you can actually say, well, instead of using this particular material or doing this particular plant, we'll use this one, and this one actually has a cost savings to it, whereas the other wouldn't have. Can you give some examples of those decisions? Yeah,
there is. For example, most of that is seen in flooring, right? Where you have flooring that the IRS considers structural. It's not to be replaced. It does have a life that it should last as long as the building. Some of that may be, like tile, for example, or a concrete floor. If some of these new buildings tend to like the look of colored concrete, and that's great, but it doesn't give you a tax benefit because concrete should last 40 years. Where other flooring, whether it's floating wood or carpet, is not going to last that long. I'd love to see carpet that in a building that is 40 years old, probably some nice shag carpet. But so those are some of the obvious ones.
Yeah, so
those come to mind.
So some examples that I've been familiar with is, obviously, if a real estate investor is purchasing a property, it is what it is. But if you're actually in the process of building or remodeling, there are a lot of decisions that if the tax accountant can get involved, they can advise and say to the landscaper and to the architect, well, let's use this instead of that because we can actually segregate it as an expense. And these are certain savings that we can incur if we do it right from the beginning. And so if you're working with the architect, if you're working with the landscaper, if you're working with some of the key individuals along the way, you can make key decisions, essential decisions that can actually provide tax savings, where a slip up at the very beginning could lose you all those savings because you
Yeah.
choose the wrong material or you installed it the wrong way. So do you have a few
So much of that
examples
is,
of?
yeah, so much of that is really can even come down to how it's classified, right? Or how
Uh-huh.
it's written and shows up on the general ledger. A lot of that
Exactly.
has to do with finish work, where doors are typically a part of a building that is necessary. And so you can't accelerate a door per se. But if the door and the woodwork are category, and the finished woodwork that is personal property and that we can reclassify, if that's all lumped into one big sum, in one big category, I can't do anything about that, right? So if we work with them from the beginning and say, okay, categorize your cabinet, don't put your cabinets in just a big lump sum of woodwork that also includes doors and things that are permanent or that are classified as permanent. But here, let us help you categorize your items so that you can take advantage of it, the tax benefit down the road.
Very good. So I'm curious, now that we've kind of illustrated or given examples of what these are there triggers that you want to avoid so as to not cause audits? Or what's your experience with audits in you've classified it and now it's being questioned?
Sure, that's one of the biggest concerns, and oddly enough, in the thousands of studies that we've done over the 2 decades, we've actually only had less than one audit per year. So when we're talking a minimal amount of these get looked at, that is the case, and not that it shouldn't be prepared for, right? But the reality is, and the concern is often, from the tax preparer and especially from those who are paying the taxes, am I going to get audited? And the reality is not likely. Most of those audits have come because of something else that was going on in the return. And those returns were significant with multiple millions of dollars worth of tax that was owed, and a cost segregation had been done and enacted, and they wanted to make sure that was all tied up correctly. And so, but the reality is, they're not likely to get audited. If they are, we write our report in a way that makes sure it's rock solid. And we've had, with our experience, we've adjusted our reports over the years to identify those things that are most important to the IRS. And those change, frankly. They have changed over the years. The questions that they've asked have changed over the years and what they've highlighted. And so, what they look at and the court cases that they argue, we have tens of, 30 pages of court cases that to justify our positions on this. And so there really is little to no concern that needs to be had. And we want to defend that. In fact, that's one of the things that we offer, we provide is we want to be and tell our clients is we want to be the ones that are called. We want to be the ones that defend this, not you, not your tax preparer, because we know our report inside and out. We know why we took the positions that we took, and we know the court cases better than anybody.
So if I'm an accounting professional and I offer cost segregation services, who are the people that I would want to align with in order to provide this service in a very competent way? I would assume it's maybe a landscaper, an architect that collaborate well with me to make sure that the client is benefiting most. There would be your services to come in and assist. What does that look like? As an accounting professional, what is it that I need to have as either connections or resources in order to offer this service competently?
That's a great question. Most of the work, in fact, the only real professional that needs to be aligned with, unless your clients are heavy in the construction industry, but even then we can work with the general contractors there. But really, it comes down to a relationship with us, right? And having and really having a better idea as to who cost segregation benefits. So much of the misconception that I've learned over the years has been my clients just don't own properties that are worth looking at. And that misconception really comes back from the early 90s when cost segregation landed on the map in a court case called Hospital Court. But that, really put it on the map, and that opened it up for big companies because that was a corporation that owed $700 million in taxes. And so big four companies at the time, big eight companies were really the only ones offering these services. And those fees were astronomical, 20, 25,000 for one building, but on huge buildings. But we've really made it available to those that own something as small as a residential rental property. And most accountants have multiple clients that at least have those properties, let alone, $1 million commercial buildings or whatnot. But it really comes down to just that, being aware of all the clients that have owned real estate really in the past 15, 20 years that have purchased it. There's never been a better time than the current tax law, depending on when your listeners listen to this, but under the Tax Cuts and Jobs Act, it's never been more favorable for the real estate sector. And so it's really, really being mindful that this isn't something for the elite, but rather for those that have any investment property.
So let me just kind of, for the listener, kind of maybe put this into context. Imagine I'm an accounting professional. I have a client that owns some properties, and as you just pointed out, it could be large commercial buildings. It could be a single investor with a rental property that they have. And let's assume that we're wanting to actually consider cost segregation as an option for the tax planning strategies. I reach out to you, and you come in and do what?
Yes, we provide a preliminary analysis. We don't want anybody to go into this process feeling uncomfortable. And so when we are introduced to the client, or we talk with the tax preparer, we get some basic information on the property, when they purchased it, what the purchase price was, et cetera, where it is. And we do some initial analysis up front, run some preliminary numbers, and then we prepare a calculator that shows a breakout of over the life of their property, how is this going to impact their taxes? And then we put together an engagement letter that has the fee and spells out everything that we will do. And then that decision can be made up front before anything is ever agreed to. They can say, yeah, this really can make an impact. This is going to impact me now, save me 10, 40, 100,000 or $1 million in taxes, and it's going to cost me such. Or on the other hand, they can say it's going to save me such, and it actually doesn't make sense. So they'll have that information up front.
And then the fee, is this something that you pass along to the taxpayer, or is this a fee that the accounting firm absorbs and passes through to the client?
We have a number of different clients that work in different ways. Some tax preparers prefer that we work directly with the client and bill them directly. Others realize that there's some work involved on their end. Minimal, we make it minimal, but they also see the opportunity as a referral opportunity, and we work directly with the CPA firm or EA firm, and they bill their client directly based on all the selling that they have to do and informing their client and the work involved there on their end. And so we do it multiple ways.
And then for the taxpayer, is this something that you've seen them go backwards and amend previous tax returns, or is this something that from this point forward they're going to be using? How do you see that typically played out?
Yeah, that's a great question and concern that is asked, and misconception. There's a tax form called the 3115 that we actually include as part of our study, which would be important for your listeners to know as owners of accounting firms, that we take care of that. We prepare that form that usually takes hours and hours for depending on who's preparing those. But we prepare that form, and that form alone allows them to not have to. In fact, its whole purpose is to just change the accounting method and move forward, catch up any benefit that was lost in the past, take account for it, and then move forward going forward. And so no amending needs to be done on a return.
Excellent.
Which is nice for the preparer and for the taxpayer to not have to worry about that.
And so for the tax preparer, the accounting firm, give us some stories or illustrations of how now offering this kind of a service and working with your firm and servicing these taxpayers that obviously have property investment properties, how are they benefiting? What have you experienced on that side?
Loyalty. I've seen time and time again. It's been great. We've been a part of watching CPA firms, some sole proprietors and other, top 100 firms in the country grow, and we've heard story after story of those firms, and we've seen them grow and offer this service to their clients. Certainly, certainly the relationship matters as much or more than what we're offering. But it's been part of, when we see the excitement, we hear about it or we get the email saying, thanks so much. This is incredible. I'm going to, bring my friends or tell my friends about such and such accountant. And we know we've seen that happen. And we've been a part of that simply because, as one of those things has been the cost segregation that they've been offered. So I think loyalty to their tax preparer, to their accountant has been probably one of the biggest things, because if we can make them look like a hero, everybody wants a hero for an accountant. So that's my job.
Exactly. Now, one of the things that I think commonly comes up in the accounting world is this discussion of niching services, becoming a specialist in certain services. And obviously, this is a great addition as a service to really target and work with investment property owners, and at the same time, like property management companies. You can work with construction companies. They're obviously building the properties for someone. You can work with landscape companies because they're obviously working with the owners of the properties. So this really gives you kind of an opportunity to niche in with certain people that in many ways have money. And so a great service, a great addition to your specialty skills, and as an accounting firm, gives you, I think, something that you can really kind of target and focus on. So let me kind of summarize a little bit of what we've been discussing here, and then I'm going to come back to Rhett and see what final thoughts he may have for us. But I believe as accounting professionals, one of the things that we always need to consider is there's just going and offering quality accounting services. And I say just loosely in the sense that it's obviously something that we do on a regular basis, and it's a great service that we're performing. But there are these nuances, these niches that we can focus on that really can allow us to, in a certain industry or in a certain way, distinguish ourselves from other accounting firms in the area. And as the whole goal here is to become the premier accounting firm. So with that in mind, obviously doing cost segregation services uniquely qualifies you to work with a certain caliber and client type, and at the same time offer a service that isn't readily available in all the accounting firms. And if this is something that you chose to offer, obviously Rhett's pointing out that there's a methodology to it, there's a system to it, a science to it. There is obviously a way to kind of meticulously go in and itemize things so that the client can benefit and mitigate some of their tax liabilities. So with that being said, it's a great thing that we have here to discuss, so that you can consider additional services that you can be offering as accounting professionals. Now, as a sponsor of today's episode, one of the things that I want to encourage you to take advantage of is Rhett has made available, and you'll find this in the episode description, is he's providing here the opportunity for those of you listening, a complimentary analysis for either yourself or one of your clients. And by doing so, you can just go to the website in the episode description and receive this complimentary analysis to learn a little bit more about how this would work and how it is that either you or one of your clients can benefit, and see if this can maybe open a door for an additional service that you can be providing. At the same time, I'm inviting you to actually go in and see what it is you can do to really become kind of the premier accounting firm offering in the black strategies. It's the 9 principles to help you grow your business, and as well work with your clients to ensure that profit is deliberate and intentional. So get a free copy of the book In the Black, 9 Principles to Make Your Business Profitable, along with this complimentary analysis for either you or your client by going to the website in the episode description. Now, with that being said, just to kind of tie this all up, for accounting professionals, what closing thought would you have as to why what you do can benefit them, and how what you do is something that distinguishes you and them as being unique?
Sure, Roger. Some of my final thoughts, the longer I've been in the industry, the more I do see that having a niche, whether it's real estate or forensics or whatever that might be, has really benefited the client. So for all of your listeners, it may not apply, but for those that have decided that real estate is one of those niches, I would encourage you to give us a call to learn more about cost segregation. And really, I would be less than honest if I said that we've heard multiple times of clients that have lost, accounting firms that have lost clients because they weren't they didn't offer these services, or they didn't at least know enough to educate their clients. And on the flip side, that there have been others that have been grateful for our services because they've acquired a myriad of clients because of that. And so we'd love to help them grow and be the premier accounting firms and the premier resource of real estate. And lastly, we see from time to time those that do try to tackle it themselves and take it on themselves. And really, when it comes down to it, the analogy that we often put forward is if I needed heart surgery or I needed brain surgery, it's not a general surgeon I would call, but I'd want to have the best. I'd want to have someone who specializes in brain surgery or heart surgery to be able to enact that and to be able to heal me the best. And I think cost segregation applies the same, as we've seen a number of returns that have been unfortunate that a preparer did their best but missed a whole lot, and at some point it impeded the benefit that they could have received had they reached out to a professional in this industry. So those are some of my final thoughts. We'd love to get to know your listeners more, but those are some things to consider.
Exactly. Well, one of the things that I think is also a reality is when working with business owners, there's those clients of ours that actually have a profit. They're making money, and there comes a time when they're wondering where should they put the money as they diversify their funds. It's just basically investments. And so as they consider real estate investments, whether it be in a property for their own company or just as an investment property for other purposes, residential rentals or business and such, all of a sudden they're in a situation where you can help them beyond just the accounting you're doing for them as a business, but now as they're an investor in their own companies, or more importantly, outside for other diversification, you're now able to meet this particular need and still retain them as a client, offering all the services that they're looking for. You're the business owner's go-to accountant for their accounting needs, but now you're all that much more as you're dealing with the investment properties and such. So lots to be said here. So Rhett, I thank you for coming and sharing and enlightening us as to this additional service that accounting professionals can in fact offer. And as tax preparers, what we can actually do to niche our services and uniquely offer some cost segregation services with your help and assistance. So again, just real quickly, definitely go to the episode description, get the information you need there for the 2 bonuses or sponsor offers that are available. And in doing so, see what you can do to really move your business forward to offer these premier accounting services. With that being said, I also invite you to go ahead and listen to our other episodes where we've discussed numerous other topics to help you actually implement in your business those tried and proven principles to help you become the premier accounting firm in your area. And as well, encourage you to subscribe to our podcast to get the latest and greatest as they're released. In addition, we want to encourage you for more information about these principles and how you can apply them in your company to reach out to us here at Universal Accounting. You can call the phone number 801-265-3777 or visit us online at universalaccountingschool.com. So with that, just realize this: if it's about accounting, it is universal. And in fact, accounting success is universal. So take care, have a great day, and let's build the premier accounting firm in your area.